All right, you're looking at a daily chart of the Nasdaq, and I wanted to shout out the honor the veterans. Today is Veterans Day, and the market is closed on November 11th. It happens to be a Saturday. I know our good friend Mike Webster has been trying for years to get the stock market to honor the veterans on Veterans Day and close the market, but today's Saturday, so it is closed by default. But next year is a leap year, and it'll be a Monday, so we'll see if Webby can get that done. Anyway, we honor the veterans today, and the U.S. Marine Corps 248th. November 10th was their 248th birthday, so to speak. So Semper Fi, which is Latin for always faithful to the U.S. Marine Corps. Anyway, I want to get started. Speaking of our friend Mike Webster, he always talks about observing the fish tank. Take notes. What is actually going on, not what you think is going on or not what you expect to be going on, what is actually happening here in the stock market. And I just wanted to point out a couple of things while we observe the fish tank. Obviously, while we have this massive rally here, this is the time to step on the gas, maximize gains, 100%, margin, whatever. And then when it topped out on July 19th and we get into these corrections, three legs down, you want to minimize, your losses, play small, because if you lose 50%, you got to get, make 100% gain to get it all back. So go big during this power trend and go small or nothing at all during these corrections. And this is three legs down. And so just observing the fish tank here, I would have to say, is the Nasdaq hit this 12,543, it stopped going lower. I mean, I think even a grade school kid could figure that out. Hey, it stopped going lower and now it went up. By the way, this peak to trough correction was 12%, pretty much garden variety with those three legs down. And since it's a weekly, I got to get this out of here. Weekly review, I'm just going to go to the weekly chart, just comment before I go back to the daily that, yeah, it has stopped going down. The last 2 weeks, it has closed near its highs, had these two hammer candles, okay? So off the bottom, it has had two powerful weeks, which is pretty similar to what we saw back here in when the year ended. It stopped going down, and then January started. We got these hammer candles 4 weeks in a row. So I'm not saying that's going to happen again, but it could. And I'm here for it. But I'm going to go back to the daily chart. And so what is actually happening here? Well, we had a follow-through day on November 1. Stopped going lower, 1, 2, 3, 4. The fourth day, we had a follow-through day. Then on November 2, the best day of the year, we had another essential follow-through day. And then on Friday of last week, we had a nice, 1.38% gain. So that's that hammer candle from last week. Now, this week, what happened? It continued its gains. And then let's just say you didn't know about the wars or the economy or the interest rates or Jerome Powell or anything, and you're just taking a look at the chart and you see this candle here, this inverted hammer. It's pretty ominous candle, right? Like, it's going to start going the other way. So that would be my expectation, right? But it just turned out to be profit taking, and the expectation breakers what happened on Friday when it was up, more than 2%. And so this thing looks like it wants higher. It took out the prior high from October 12th of 13,714. And I'm sorry I'm spending so much time on the Nasdaq. I know people like stocks, but it's nice to have the tailwinds from the market. And I'm sure your trading was much better the last couple of weeks than it was during these 3 months where it was down for 3 consecutive months, which has done that 2 years in a row, which has not done that since the financial crisis, 2008, 2009. So pretty rare. But like Webby says, you're just taking notes. You're observing the fish tank, stop going lower, follow through day, trading higher. Now it's 3% above its 50 simple moving average. I can see this 10 EMA is crossed above the 50. This 21 looks like it wants to do it. So perhaps we can get into a power trend like we had earlier in the year, but we take things one day at a time. and just observing the fish tank. So shout out to Mike. Anyway, I'm going to go through some stocks here, and these big cap, mega cap tech stocks, they get all the headlines, the news, and people want to talk about them. They are driving the indexes because they are so large, and it takes a lot of money to move these things. And Apple, you can see it's making new highs now above the old 182.34. Next in line would be that 189.98. I'm not a big Apple fan. Why not? Because they don't have the growth, that I look for. And I believe that Microsoft can certainly overtake Apple. But Apple looks a lot better as it, took a dive below its 200 and now has rallied back through the 50. And it looks better, but this is the one that I like, is Microsoft. A little better structure on this chart here, not so choppy, nice symmetrical cup. It is a weekly review, so I should show the weeklies, and this cup looks good, and everybody wants a pullback and a handle, and they might get it, might shake somebody out, but it also could just rip right to 400, so you got to be prepared for that as well. I expected this to come down, like I talked about earlier. I expected to pull back, but it pulled back one day. I expected it to come here to 365 and then pull back to a moving average before going higher. But hey, this thing's got a mind of its own. Doesn't care what I think or what I want. You can't always get what you want, right? But we get what we need. Microsoft, solid stock. This thing looks great. I got it here at the 340. If anybody cares, we had this on, our MC stock charts on our ready list, but I think it's a little extended now, but you can see it shaping up though. And Microsoft looks great to me. Another one, and I am spending a lot of time on the Nasdaq, or the index, and the drivers of the index, because this is where the big money's flowing. Amazon, it's a weekly review, so I've got to go through this. Had a little flat base, and now this consolidation for another 8 weeks. So that's about 13 weeks of consolidating. And yeah, it did pull back to its 40-week line, or the 200-day here. Right here, you can see that at 118, and then it just rallied right back through after earnings. This one pulled back a couple of days, but didn't even make it back to its 10. And then on Friday, hammered 2% higher. So Amazon's another one that looks good to me. Meta is one of my favorite charts right now. Do I own Meta? No. Why not? Because I'm a dummy. But to me, it's still actionable. We had it at 312.87. I should have bought it. Some people at MC Stock Charts told me that they bought this and are very thankful, but you don't have to be thankful. You just just Meta's going higher. It's getting the love. Let's see, the consolidation here was 10 weeks so far. To me, it still looks actionable. It's got that pattern rec buy point of 326. So 312 was early entry. But anyway, I like the looks of Meta Platforms, and I might plunk down, but I've already pretty heavily invested in some of the other big caps. Okay, I did Amazon, I did Apple, Microsoft. I'm trying to avoid these two. Google and Tesla I don't like. Google vertical violation, and it just has taken forever to try to get back up to the 50. That's a loser. And Tesla is, like Tom Petty saying, is free falling below the 200. No thank you. And the one that I do like, and I did go heavy this week, was NVDA. Why? They got earnings coming up. What are you doing buying ahead of earnings? Well, I like the pattern. I like the chart pattern. I mean, on Thursday, when everything else was pulling back, this thing was up with heavy volume here. So tells me somebody wants this thing. And if we take a look at this consolidation here, first of all, it had a huge run. It's up a lot this year, just like Meta. Now it's consolidated in this double bottom base with that 476 buy point. So I think that's viable. And we'll see what happens here with the NVIDIA. If it doesn't work out, it doesn't work out. You always take a small loss if it craps out. But I think NVIDIA is strong. And since we're in the semiconductors, I'm going to go to AMD. This is one that, I should have really bought this. I'm kicking myself, because we saw this break above the downtrend line after earnings on, I think it was November 2nd. Yeah, the best day on the calendar. They had earnings and it shook people out. It traded down to like 93.11 in after hours or pre-market. Then it just ramped higher, and that was your sign. And it's just continued higher. I want to say that was about, in that one, this was 111 here, 111 here, but I want to say this day here was about 108. Yeah, the high was 108. Pull back slightly the next day, and it's showing a lot of strength. So I like AMD, and of course Broadcom, and Broadcom's a beast. Broke out of this base here. It's a weekly chart, so I got to go to the weeklies. I mean, it's a weekly review. You can see this big cup with handle pattern, boom, breakout. Now it's consolidated here for a long, long time. 8 weeks there, 5 weeks there, and then a little bit of a handle, now powered higher, almost 9% last week. So that's a heck of a move with volume. So congrats to the longs there with Broadcom. Anyway, I'm going to go down a negative road and then bring you back on the positive track, because I have to talk about the oil and gas. Oil and gas, the price of oil's come way down. The price and the pump in your areas come down, I'm sure. And Chevron is just taking a hit. They spent a lot of money buying Hess, and it's gone down ever since, with the price of oil. And you can see that it's just below its moving averages and not looking good. I guess I could do Exxon as well. Pretty similar. They bought Pioneer and sold off ever since with the weak oil. But Tidewater is one that I had on my list, and it had earnings last week and just crapped out. So that's a sell when they violate the 50 like that. It's adios muchachos. Followed up the next day with another loss. So goodbye Tidewater. And the other one is Devon, which is just free falling. This is a Tom Petty poster child here. This one is just a mess. Pays a nice dividend here, but you can see 7.6% yield, but you can have the yield. I don't care. It's down 38% off its high. Okay, so anything more negative? Yes, retail. When oil goes down, retail, consumers slowing, the economy's slowing, and retail is being sold. Target's got other issues, but as long as it keeps its yield, dividend yield, I think it's going to be okay. The CEO is a pretty sharp guy, and they'll probably figure it out, I would think. But it's being sold off, and it looks terrible. Skechers is another one. Doesn't look all that great. Trading, down to below its 200 now, kind of closed right at it. The other one is Foot Locker. These retail stocks have been hammered. Anyway, like I said, that's enough of the negative. I could do a lot of negative. There are some positives in the retail sector. Deckers, this is the Hoka and the UGG brand, and they reported earnings and blasted off. I'm going to talk about this earnings gap a little later, but you can see that this has strength, good volume coming in, making new highs, and we like new highs. Abercrombie and Fitch is another one that's gapped. This is a serial gapper here. It gapped back in November of last year. It gapped higher in May, and then it gapped higher in August. So it's getting a little long in the tooth, and they report November 21st. So we'll see how Abercrombie and Fitch holds up in the retail apparel space. The other one is AEO, which is American Eagle. I go to these malls and the stores, and these stores are crowded. Urban Outfitters, Crocs, Nike. There's still people out shopping. Christmas is coming, but they have earnings on November 21. This is American Eagle Outfitter. You can see it's consolidating here, this big cup. And actually the cup here is actually a handle in a stage 1 base. So maybe it'll break out to higher ground here, but definitely some strength in the retail. Not a lot, but some. And I'm going to move on because the software is the name of the game. Software semiconductors, a large cap technology stock. So I'm going to spend some time on software. ServiceNow was on our watch list, and it's pushing away from its base here, as you can see on the daily. It had just like the Nasdaq, it had these corrections, right? These 3 legs of, downturn, and it just ramped higher. When November started, things changed. And there you can see on the weekly, the flat base pattern, 15 weeks. Okay. So ServiceNow still looks actionable, but it's getting a little extended. So your risk goes up, the higher that thing goes. This is VRNS, Verona Systems, another software company. I'm just pointing it out because it's trading at new highs, right? The relative strength, the 10, the 21, the 50 stack. This one's starting to trend nicely. So that one catches my data dog. I'm just showing this because of the gap higher. Still consolidating within a base. You could see that on the weekly. You could see this big cup with handle, and I think 120, 118 would be an area of interest that needs to get above there. That 118.02, the high in the handle. Okay, let's move on. Anything good here? Oh, Palantir. I got to go to Palantir because this is a stock. Okay, you can see on the daily it's formed this cup, with handle pattern. It kind of broke out. What day was this? November 2nd, the greatest day of the year. See, I'm telling you, November 2nd, it's awesome. But it broke higher and then traded flat for 5 or 6 sessions. And then on Friday, blasted up like 8%. But I just wanted to show you that this company has, quite a bit of shares in the float here, and they have management still holding a bunch. So you got to be aware of that. The shares outstanding and the shares in the float. So it takes a lot of demand to move all that supply. And you can see it does have even overhead supply too to kind of worry about. So I'm pretty impressed with Palantir being able to move like that. And if it gets above that 2024 level, I'm even more interested. So Palantir looks good to me, and it's showing relative strength by the this RS going through all its moving averages with the blue dot 99. If you want strong stocks, you want the 99 rating. There you go, Palantir. Let me see what other one is in the Adobe. Adobe should be included in the Mag 7. This thing is a beast, and it's just made new highs on Friday, up more than 3%. With volume. You could see this on the weekly, the big sell-off, the 2022 bear market, the Jerome Powell interest rate, bear market, and then now it's caught traction, consolidated in this base here for 5 weeks and blasted higher last week. So Adobe looks good to me. And of course, MSTR MicroStrategy, this is a big winner in the computer space. You could see the computer software, I should say, database, the big cup handle, the blast higher. It's extended now, but look at all these big blue bars. I think it's up like 14 to 16 days, which qualifies as David Ryan's ants, which I don't really understand that great. Just relative strength. Once again, the 99, right? Relative strength blasting through the moving averages. If you want the top 1% stock, there it is. Cybersecurity doing well. CrowdStrike, this is the one that I own. I bought heavy back around this 162 area, and I'm just holding on to it. It's just trending higher. This is a trend trader's dream. Why? Because it's finding support. It's finding support at moving averages. It's making higher lows. So if it comes back a little bit, to a moving average, then it might be an opportunity to get in. Zscaler is one that I missed. I'm pissed about it. But I think it's still actionable here. Not bad. Had a good week. You could see the, I got to stop here. It's very difficult to tell which one is stronger here. I kind of go by the moving averages. Zscaler 6.2% above the 21 and 4.5 above its 10. And CrowdStrike, I'm sure you're going to remember those numbers. CrowdStrike is 4.4. Zscaler is 4.5. And the 21 at 6.9. So these two are leading, and they're very close. But I own CrowdStrike and I want Zscaler. Okay, I'm going to move on. Palo Alto Networks is reporting this Wednesday. You can see it's just been consolidating in this base here since July 5th. So it's been a long time here. I think they're going to report a killer quarter and make new highs, but that's just my expectation. I wouldn't buy in front of it because of the implosions we've seen on earnings recently, which I don't want to get into right now. And then, QLYS, QLYS is another one in this space that, come on, Market Smith, don't glitch on me now. Okay, I'm going to forget QLYS. You can see QLYS, big cup with handle pattern and blasted higher on earnings. Last week had an 11% move. If it goes back to the daily, and there it is, the 11% move with volume, and is traded higher. So that's a nice breakout. Anyway, enough with the software, enough with the semis, enough with the retail, enough with the oil and gas. I'm going to go to drugs because I like drugs. And there's only two drug stocks that I really like. One is Eli Lilly for obvious reasons. I mean, this thing is a monster. I've got to go to the weekly. You can see it's just trending higher. Everybody talks about the weight loss drugs. They just got approval last week. It was kind of a rubber stamp deal for obesity, but they also have Cialis, and they have, bigger pipeline. This thing is a monster stock. It's 567 billion market cap. So it's a big one. And I like it. I like the way it trades. It pulled back last week on Thursday, I believe, and somebody downgraded. I think it was Deutsche Bank. But all it really did was trade down to its 21, found support, and bounced on Friday. So that looks fine. And the other drug stock that I like is Novo Nordisk. And this one, it broke out of a base here, and it's just been consolidating since August. Hasn't really gone anywhere from that high of 96.09. Yeah, it's at 101. But to me, if, above that 188, that's definitely a point of interest for me. Novo Nordisk just consolidating though, and they're delivering just killer earnings, accelerating sales growth, earnings growth. I mean, so it's all about the future sales, right? And this is a 450 billion market cap, and Eli Lilly and Novo have similar sales, but this one for some reason is $100 billion cheaper. But anyway, I'm going to get off this, and I'm going to honor Steve Jobs and say one more thing. And I just want to talk about the earnings gaps. With earnings, I like, the daily range to close above 75% or higher, 70, 75%, close near its highs. I want the volume to be, 100% or more, and the price to increase at least 10% on the session. Deckers, had this breakout on earnings not too long ago, October 27th. That's when the index bottomed. This one, this is a power earnings gap of 19%. Essentially, it closed 79% of its daily range with 377% of the average daily volume. So that qualifies as a power earnings gap. And what did it do since this day? I mean, the high that day was 585. Now it's 632. So it's just continuing higher. I thought it would pull back to its 10, but it hasn't yet. And so we compare something like Deckers to something like Roblox, which gapped higher last week. Did it gap out of a base? No, it didn't. What day was this? The 8th. So that was Wednesday. It gapped up 11% with 474% above average daily volume, but the closing range was 43%. So on that day, I'm going to go to the 5-minute chart and just show you how it gaps higher here. And then, just selling all day. I mean, it's like people just taking profits and saying, get out, I got back to even. Then it follows through the next day to the downside and just, went from 42 down to 38. So that was a gap in crap for Roblox here. And I mentioned that you could see this bar here, which is like an inverted hammer. It closes near the lows and follows through to the downside. So we knew to avoid it and or short it or whatever. I'm not shorting a market like this, but we knew to avoid Roblox. And that's the difference between Deckers and Roblox. I mean, Deckers broke out of a base with the qualifications of closing above the 75% daily range, 100% volume, and more than a 10% price increase. Roblox didn't. Duolingo, let's go back to last week where Duolingo blasted higher after earnings, and this is blasting out of a base here. So you want them coming out of a base and not off bottoms. Just talking about earnings gaps here. And this one was up, 21% on what day? Thursday, the 9th, and it had a closing range of 97%. So you see that hammer candle with 438% above average daily volume. So that's telling you that buyers are coming in. They want in. They're clamoring for this stock, and it continued higher more than 4% the following day. Take a look on the 5-minute chart here. It's just totally opposite of Roblox, blasting out of a base. Buyers come in, yeah, profit taker here and there, but man, they just came in all day. Buyers, buyers, buyers. Followed through the next day, some profit taking to the downside. Buyers, 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 powering higher. Then a couple of going into the weekend, let's take some profits. So Duolingo still looks good to me. I would not be afraid of that one on a pullback. I know people are going to talk about fundamentals and it's 10 times sales, but this is a technical trade right here. There's more buyers and sellers, and the buying pressure is immense. And let's compare that to a firm which broke out last week. Yeah, tried to break out of a base on, what was that, Thursday? But what's wrong with this one? It was up on Thursday. It was up more than 14%. With 234% above average daily volume, but the closing range was, what was it, 16%? Yeah, geez, people are wanting out of this stock. So, you want to see it close a little higher in that daily bar there. So what happens? Let's take a look at the 5-minute. So yeah, it gapped higher, and then people are saying like, I'm out of here. I'm back to even, and I'm going to sell this thing, right? Sell, sell, sell all day long. Sellers gap down Friday, and just sellers taking profits. They don't want any part of a firm. So this thing went from 27 to 22 in the space of 2 days because it didn't meet the qualifications that I think. Nothing's absolute in the market. There are no absolutes. DraftKings is another one that gapped higher, and this was still what I would say was in a base. Some people might say that's gapping out of a base, but that had a 16% move. Daily closing range was 89%, and it had a nice move afterwards. So I'm still liking DraftKings there, right around $34, $35. And let's compare that to TMDX. Oh boy, TMDX. This one, see, it gapped off the bottom. See, that's the problem. And then, because it runs into this overhead supply, these people want out. They bought it, 90 or 80 or 70, and this thing gaps up to 65, and they want out. So it did have a nice day on the 7th. It was up, 51% is a nice day, 800% above average daily volume. The closing range was 34%, though. So it's telling that there's sellers there, and it followed through to the downside. So if we take a look at the 5-minute, and you can see, yeah, the gap higher here, and then just sell, sell, sell. Maybe I should look at a 10-minute here. There's your gap. Had a 15 minutes of fame, and then it just started selling off from, what was it, 68 down to 55 or whatever. So that's I think I made my point. I think you understand. You want them breaking out of a base. You want them with the closing range above. The higher, the better. The more volume, the better. The increase in price, the better. And the closing high daily range, 100% higher, the better. Anyway, that's it for me today. Thank you for watching. Sorry I went so long. Just wanted to talk about the veterans and honor them, and how Mike Webster, our friend, talks about observing the fish tank. So everybody sees it differently. That's okay. Everybody has different goals and objectives and timeframes. That's okay. But at MC Stock Charts, we never give up. Thank you for watching.